Corn ended the day on the plus side of unchanged, and the market hung on to gains even as soybean prices turned lower on the day. Wheat did not do much to help the rally and gave up most of the mid-morning advance to close mixed. Feeder cattle traded lower early in the session and never recovered. Live cattle reacted to strong beef demand, and lean hogs closed higher.
Live from the snow-covered peaks of Hump Day via Farm Journal Studios, this is AgriTalk. This afternoon, we begin with a conversation with Clayton Pope from Clayton Pope Commodities. Directly following the news, Todd Bubba Horwitz from BubbaTrading.com. I'm the handsome newsman Davis Michelson. Now, here's the host of AgriTalk, Chip Flory.
Dude, it's been like 3 months since I've seen snow.
Yeah.
At least.
Yeah. Uh-huh. Mm-hmm.
So I don't know where you're seeing these snow-covered peaks of Hump Day, but
imagine my surprise upon arriving at the summit of Hump Day, and there's snow up here, dude.
that would very much be a surprise.
I didn't even bring galoshes. Yeah.
But have you got sunglasses? They get bright.
I got a little,
it's so bright up there.
Well, sure. You want your sunglasses? You want a little zinc for the nose? You know, let's not burn. Let's not burn.
You got to take care of yourself. That's
Absolutely self-care, people.
That's right. Welcome to AgriTalk. I'm Chip. That is Davis. It is Wednesday afternoon, and we've got a conversation with Clayton Pope from Clayton Pope Commodities coming up here. You know, there at the end I said that lean hogs closed higher. I should have said lean hogs closed higher again. Mm-hmm. It's like 4 days in a row that lean hogs have closed higher. Yep, stringing them together is exactly right. Good movement in beef this morning, something that I think is probably going to have an impact on the cash market before the end of the week. And the grains, beans were the most disappointing today. And, corn was on the plus side of unchanged, but it was well off session highs again. I don't know. I kind of feel the same way about the corn performance as I did yesterday. I want to be disappointed, but it closed higher, and it's July 24th, and there was rain on the radar, and who knows? Maybe they've got a big crop scenario all built in and baked into prices. Well, that's one of the things that we're going to talk with Clayton Pope about coming up here in just a little bit.
All right.
Okay, man. You ready? Let's get started.
Chip, December soft red winter wheat futures posted an outside trading day with a low range open and a mid-range close. The contract also traded on both sides of resistance at 575 for a fourth consecutive session as the market attempts to solidify the low posted last week at 550 and a quarter. A weaker U.S. dollar helped support wheat prices early in the session, but spring wheat futures gave up mid-morning gains and turned lower following reports from the hard red spring wheat tour in North Dakota. Scouts there finding record yield potential. Yeah. December HRW wheat futures 1/2 cent higher, 583 and 3/4. December SRW wheat up 3 1/4 to 571. September spring wheat closed at 610 and 3/4, down 4 3/4 cents.
I don't think that anything that they are finding on the Wheat Quality Council tour up in North Dakota is surprising. I think it's just, kind of confirming that what the trade was expecting, and a little bit of ground truth is probably putting a little bit of pressure on spring wheat futures.
Well, Chip, December corn futures traded above 420 again, but upside momentum drained out of the market as prices sat back to a low-range close. Short covering by professional trading funds were responsible for the early gains. The threat of a warmer and drier pattern in the western Corn Belt also limited selling. Ethanol production in the week ended July 19 averaged 1.095 million barrels per day. That's down 11,000 barrels from the previous week, but slightly ahead of the same week last year. Ethanol stocks bulged 563,000 barrels to 23.7 million. September corn futures 1 1/4 cents higher at 403 3/4. December corn up 3/4 of 1 cent to 418. March corn futures closed at 432 1/4. That's up a penny on the day, Chip.
Everybody we've talked to has been talking about the good ethanol margins. Yeah, production slowed down a bit, 11,000 barrels on average per day in that week, but it's still really good at 1.095 million. Really good ethanol production.
Well, Chip, soybean oil prices were an anchor on the bean complex throughout the session and traded lower even as soybeans tried to extend the upside recovery. The pressure on bean oil came despite gains in crude oil futures and reports that Indonesia is planning to use more of its palm oil in its domestic fuel supply in the months ahead. The weight of bean oil and a weather forecast with few threats to the U.S. bean crop ended the upside bean price recovery after just 2 days. Today's close on session lows points to a return to the 1050 level in November futures. August beans 6.5 lower, 11.11. September beans down 11.5 cents to 10.60 November beans closed at 10.64, down 11.5 cents. Chip.
Yeah, I've got some thoughts on that Indonesian use of palm oil for the fuel. Well, if we come up, if we get a chance in the conversation with Clayton, we'll do it, or we will definitely do it at the end of the show.
Well, December cotton today was 83 points lower, 68.65. On your livestock, cattle traders are looking for direction from the cash cattle market, but the cash cattle market should be watching the cash beef market. Boxed beef prices this morning were just slightly higher, but movement was outstanding. That helped nearby fed cattle futures erase early losses and to close at the highest level since October 12 of last year. August fat cattle today were 60 cents higher, 186.90. The October contract up 15, 186.27.5. And August feeder futures, $1.62.5 lower, 257.12.5. And on the snout side, front month lean hogs closed higher for a fourth consecutive session. August hogs today, 12.5 cents higher, 93.77.5. Chip.
All right. Thank you very much, Davis. Let's bring in Todd Horwitz, BubbaTrading.com. How you doing, Bubba?
What's up, fellas? How are you?
Well, not too bad. What the heck happened to the NASDAQ today?
Well, I mean, you take away those 5 stocks and they go under pressure and the markets get hammered. And I think this is the beginning of what's going to happen here. And of course, they keep begging for that interest rate cut, which you and I know both cannot come unless they do it for political reasons, or a recession, which you could make a case that we're in a recession. At least part of the world is in a recession, part of the country. But again, there's when the sellers come and the panic starts, you know how it goes. It's the same thing that we watch in the grain markets, and now it looks at the grains that finally found a bottom.
Yeah. Are you getting back on the blue side of the grain markets, or are you staying out of them for now?
I've been on the blue side through their whole destruction
Really?
On the way down. I mean, I just kept buying them. I feel like I'm a farm, right? At certain prices, I'm going to store them, and as long as it doesn't cost me to store them, I'm going to keep them until the prices go back up. I mean, that's kind of what happens, and that's why I always explain to everybody, if you have to pay for storage, then you have to get rid of it. But if you can hold it without having to pay, then you might as well hold, because these prices are under cost, basically.
Yeah, that's absolutely right. Cattle. Boy, that was another impressive close again today. Highest close since last October.
Listen, they're beating me up there too. I'm short cattle and long hogs. So I don't know. I don't understand what's going on, but I expect to see the same action in the NASDAQ in cattle pretty soon.
Okay. All right. Interesting stuff. Thank you, Bubba. Appreciate you, man. Be good.
Thanks, buddy. Appreciate it. Bye.
Yep. All right, that is Todd Horwitz, BubbaTrading.com. Coming up next, we're going to get into a conversation with Clayton Pope Commodities, right here on AgriTalk.
Knowledge is power. We're here to charge your batteries. AgriTalk.
Welcome back to AgriTalk. Glad that you're with us. Wednesday afternoon, July 24th, and we have, for guest analyst today, Clayton Pope Commodities. Clayton, my goodness, man, it's good to talk to you again. How are you?
Hey, Chip. Well, I'm just doing great. It's good to be back on.
Yeah, glad that you are here. Just give me your thoughts here, just to kick things off. Give me your thoughts on how the markets are trading, what might be the major influence that you're keeping an eye on right now.
Well, it's obviously a pretty challenging outlook, Chip. There's no denying that. the carryovers are bearish, although we did get kind of a friendly surprise in that last supply and demand when they cut that corn carryover, thank goodness. Yeah. We can use all the help we can get. But we're very, very much in a weather market. It's obviously getting a little late to do too much damage to this corn crop, and I think the market is, fully aware what kind of yield range we're probably looking at. But the bean market, there's still room for some variation there. But even that, you look at these 8 to 14 day forecasts now going out into the first week of August. It would take a very unusual turn to an ugly enough weather scenario to take these beans down a big way too, yield wise. So I think the most important thing right now, beans of course is weather, but and then just the dichotomy between the fund shorts and the farmer longs, basically.
Yep. Clayton, that's where I wanted to go. How did the funds figure this out so early? Usually, we've been talking about this short in the funds since some of those planning delays that we had, and they might have shown a little bit of willingness to climb out of those short positions for a short period of time, but they piled right back in there. It's one of the most persistent shorts we've seen, isn't it?
Well, you're absolutely right. And boy, that does raise a real good question because, the real simplistic way of looking at what funds bias would be where, the slope of the 50-day average and where the spot market is compared to that 50-day average. And this time is a little bit different because even in May when, we got off to, arguably a little bit of a shaky start for whatever reason, and we were well above that 50-day average in both corn and beans. The funds still, for the most part, wanted to maintain those shorts, and they weren't spooked out of them. But when it did fall there and went below that 50-day average, boy, no question, they just monkey piled onto it and took those positions bigger than anyone imagined that they could, really. So, you typically think of the fund animal as, more a technical beast than anything, but I don't think there's any doubt that, a lot of these algorithm models, they take other things into account, such as, the projected carryover. And I think you really can't underestimate the sentiment that has probably somehow been built into these models that when you look at the yield performance of the last couple of years, despite some pretty big, stressful periods, the yields still come out remarkably well.
Yeah.
And I think as such, they probably, a lot of these trading models just kind of had like a no fear quotient built into them.
Yeah. Good observations there, man. Over the past couple of days, we saw some strength in soybeans. Disappeared today around mid-morning. And what we kept hearing was, well, the funds just got too short. It's not a good thing when the most bullish thing that you can say is that the funds are short and need to get out. And here,
isn't that the truth?
That's what we're dealing with, isn't it?
Well, it is, and we've talked about this before on earlier shows, Chip, where a lot of people they have that thought that, oh man, these funds are so short, just wait till they have to cover. But that's just not the way to look at it. Obviously, if there is a big enough of a catalyst to really send them on a stampede towards short covering, then that is a viable way to look at it. But what is usually more the case is that the bigger shorts they have, the more vested interest they have in forcing this thing as low as they can.
Yep.
And I think that's exactly what we're doing. And I think in recent weeks, the potential bull out there has just become so absolutely demoralized that everybody's afraid to step forward and pick a bottom. It's like, no matter, like the wheat example is the perfect case. The wheat case is a perfect example, I think, because even when you saw, Russia lower their production estimates, or, there were ships bombed in the Black Sea, mined and that kind of thing. And, everything's supposedly bullish, man. Wheat had opened 10 or 15 cents higher. By the end of the day, it's lower. How many times did you see that happen? I think that was kind of a red flag. It's like, holy cow, if they can do that, to the wheat market when the stocks to usage ratio on world exporters of wheat is like at an all-time low, and they still are able to absolutely hammer the heck out of wheat and keep its their boot on its throat. What on earth are they going to do with the corn and bean markets? And I guess we're seeing exactly that right now.
Yeah, it's starting to feel that way. So then the question is, if it feels like the past couple of days that a bit of a bump in corn prices has encouraged some additional selling. Are you seeing that? Is that old crop corn that's finally starting to move through the system?
That's probably a real good observation. I think that there is a lot of that going on because it's interesting. The last couple of days, the general thought from just observing the price action was that, oh my gosh, finally funds have been there covering their shorts. And then you look at the open interest numbers, and that's just not.
Yeah.
It doesn't seem to be the case. I mean, those
Right.
open interest numbers are sometimes pretty hard to interpret because you got a lot of moving parts that you're trying to look at the final net of. But when you see open interest either not decrease very much or actually increase after a couple of big up days, then these funds once again they just know no fear, it would appear, and it would appear as if you are seeing some producers throwing in the towel. I think you get a little bit of strength here, and people think probably not going to see a whole lot more of that. I better start to bail, and I think that's exactly what you've seen kind of stifling these rallies.
Yeah, Clayton, it just occurred to me that I need to stress something here. And Clayton, if I'm out of line when I say this, just let me know. But there's no way that neither Clayton nor I think the reason that we've been under so much pressure is just solely because of the fund short in corn and soybeans. Clayton's done a nice job of laying out the fundamentals in this market. The number one thing being the increase in the carryover year to year and so on. We've spent a lot of time talking about the funds, but the funds aren't the only reason that these grains have been under pressure, right?
No, you're right. I mean, everybody wants to blame a boogeyman somewhere. Years ago, it was the commercials. They were the bad guys. It's Big Four or whatever, they're the ones who know everything and they're dictating all the prices. Now a lot of people think that about the funds, but no, you're absolutely right. It's not that simple. And it's nice to have a boogeyman to kind of point to, but I mean, look at the carryovers. I mean, you're looking at this bean carryover is projected carryover is pretty horrendous, not only in the U.S. but in the world. Yeah. Corn number in the U.S. carryover is pretty bad. It's not all that bad on a world basis, but I think just the sheer size of the carryover is one thing. The knowledge that the farmers is for the most part thought to be undersold. No question, export demand is disappointing. Certainly not what we thought. I mean, China's just been remarkably absent from new crop almost completely. And that's a big deal. So you add all those up together, and you're just putting more and more little weights on the bearish side of the scale.
Yep, that's right. Okay, before we get to the end of this segment, we've only got a little over a minute left here before we need to take a break, but I got to know, what is baked into corn and soybean prices right now, Clayton, when it comes to yield? Is it sub-trend line, or trend line plus that's baked into the markets?
Well, sure. Of course, there's a lot of different ways to compute trend line, but look at the USDAs. I mean, they're using 181 and 52. Yep. It's really weird. I mean, 2 weeks ago, it seems like everybody was saying how ridiculously high those were, and how low into the 70s are we really? But has that changed? I would have to say the market right now is probably trading something in the 183 area for corn and probably 53 for beans.
Yeah.
Be my best guess, and the resultant carryover of that, of course. Oh, go ahead.
Yeah, I think that makes a lot of sense to me. What were you going to say on the carryover?
Well, I mean, then you also have somewhat of a change is expected in the acreage number too, which we'll get that FSA data in advance of the August S&D. For some reason, the trade is thinking that you're going to reduce each by 1 million acres, but I'm not really sure, how much I'd count on that.
Yeah, I don't think I would count on that yet either. Let's wait and see the FSA data when it comes out. Clayton Pope Commodities is our guest analyst today. What's the biggest threat to prices now? And what kind of positioning do you want to have in place to guard against it? We'll talk about that next.
Let's go to the markets page at profarmer.com and check today's closes, where December HRW wheat futures were 1/2 cent higher at 5.83 3/4. December SRW wheat up 3 1/4 to 5.71. September corn futures 1 1/4 cents higher at 4.03 3/4. December corn up 3/4 of 1 penny to 4.18. August soybeans 6.5 cents lower at 11.11. November beans closed at 10.64. That's down 11 1/2 cents. December cotton today was 83 points lower at 68.65. On your livestock, August fat cattle today 60 cents higher at 186.90. August feeder futures 162.5 lower at 257.12.5, and August lean hog futures 12.5 cents higher on the day, 93.77 1/2. Get more market news every market day. Visit tryprofarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. The chickens have come home to roost. Find out whose fence they're perched on today on AgriTalk.
All right, welcome back to AgriTalk. We are in the middle of a conversation with Clayton Pope from Clayton Pope Commodities. I'm your host, Chip Flory. Davis Michelson is out there, too. I know he is.
I am.
He's out there
I am.
someplace. Yes,
absolutely. Standing by.
Very cool. Very cool. All right, Clayton. Let's jump right back into it. What's the biggest threat to prices now as you look forward? I mean, the way I'm kind of looking at it is, how much better can the weather get? How much shorter can the funds get? And what are you, I mean, is it a demand thing that is that a threat? Because when I look at beans, I'm thinking, how much worse can the bean export demand get?
Yeah. Well, I do think there's still some risk premium in prices, especially the bean market, and corn too. I mean, we've still got some growing season left, and I think hope springs eternal from the bulls that, something will pop up here. You look at that Western Corn Belt's map. I mean, it looks pretty darn hot and dry. And if that verifies and they really start to bake out there, I mean, you can make a case for that bean yield slipping down some. And that might be just enough of a trigger to inspire some short covering by the funds. But so I think the biggest threat going forward would probably be the weather and just the catalyst that would provide. I don't think the funds can get a whole lot shorter here. I mean, you see, we're already at record short levels in beans. If you add corn, beans, and wheat together, it's all-time record high in their shorts. Sure they can get somewhat shorter, but you've probably seen some of these studies that look at fund shorts as a percentage of open interest. That's at an all-time high in corn. So, holy cow! I mean, you just wouldn't think it could get saturated a whole lot more. So what does that make the biggest threat? Well, ironically, the biggest threat's probably some farmers selling that's got to come in here and hit this thing, because, there's still some fair amount of old crop inventories being held, and there's an awful lot of must-move fall bushels, too, that are going to hit the market. But it doesn't necessarily mean that Armageddon is coming. I think in all likelihood, we've not seen the lows. I think we'll go down and go somewhat lower. But, how many times I've talked about this with some of our brokers and my son Taylor, how many times have we gone into January licking your chops being short the bean market because you just know Brazil is going to have an absolute record yield and record production on top of record acreage, and you're short licking your chops waiting for everything to fall, and it rallies in the middle of Brazilian harvest, which at this point is bigger than our harvest. So I think an awful lot of this bearishness is built into these markets, and I think people hopefully will be pleasantly surprised that the further weakness won't be as cataclysmic as a lot of people are calling for.
Yep. Clayton, you're bringing up something that has been kind of it pops into my head every now and then. You remember what it was like? We used to rally in May. And well, from March to May in the bean contracts, we'd see some strength in the market. We were given the South Americans the best-selling opportunities of the year with that spring rally that we had.
Yeah.
Well,
frustrating.
Now that the roles have reversed on production, should we start anticipating, getting a harvest rally to sell like we used to give to the South Americans? I mean, to me, stranger things have happened, and the market has shown a tendency to do it before, just not, at different times of the year. It's a thought that has come into my mind, and I thought I'd throw it out there to you. What's your thought?
Yeah, well, anything's possible. I guess I wouldn't want to bet on a harvest rally as much as I'd like to think the harvest fallout won't be as bad as we're afraid it will be.
Okay.
And I think maybe post-harvest, that's when I do think there's a decent chance for some demand to surface. I mean, we're looking at kind of a worst-case scenario, I think, on demand expectations right now. And justifiably so, I think, when you look at, like I said, the almost total lack of Chinese interest in new crop corn and beans. But
why is that, Clayton?
The fact is China does have to come to us for some beans, and there's no question. And you're looking at some world production numbers in corn particularly, and wheat, that you'd think the world buyers are going to have to turn to the U.S. more than they have so far. So all those things taken into account, and I do think that you'll see a pickup in export demand.
Okay, why has China been as absent?
And also I think the expectation of the Trump tariffs is so high too. It's kind of off the charts. I mean, okay, if I think we've absolutely assumed the worst on that front. And last thing Trump would want to do if he's elected, and that's a big if, I think. If he's elected, I think, he doesn't want to torpedo our farm sector, any more than anybody else does. So, that'll probably turn out better than a lot of people are thinking. That would be my guess.
Okay. All right. So what do you want to do about all this risk that we're facing? And with the risk comes opportunity, because what if we do stick a low in and we do get a rally before the end of the year? You want to be there to take advantage of that as well. What are you thinking as far as some marketing strategies?
Well, I think a more justified fear right now is for lower prices. I'd be more worried about that than I'd be worried about the bull train leaving without me.
Okay.
But so I think there's still things that can be done. I think a person has to look at his operation to see, how many bushels are going to have to leave the farm in the fall. And even if you can store everything, I don't think the right thing to do would be to go into the fall with nothing sold either. I mean, it could be a long, scary waiting period, But so I think there's still some steps that could be taken. I mean, I think in all likelihood, the upside is limited. I mean, we could certainly get a bounce here, and I sure hope we do, more than we've had so far. But, you look at some of those upper strike calls in the corn and the beans, they still have some decent premium in them, and you can use some of those to finance some puts, I think. And with the understanding that even if we do rally and those short calls turn into a short hedge, so be it. It's a heck of a lot better off than you are right now.
Right.
So I think, that's a real viable strategy to look at some unsold bushels, being protected that way. And then I think, you just got to kind of do the math and see, what are your cash needs? I think, we're going to have good carry in the market. So storage will certainly be worth something from a merchandising standpoint. That's a real positive, I think, that isn't always there. So, but like I said, I think the between the prospect of funds eventually coming out of these shorts, the farmer selling eventually subsiding, whatever kind of bulge there is in the fall, and the prospect of better export demand, I think there is light at the end of the tunnel here. But I'm not saying I'm some wild bull by any means, but I don't think the Armageddon is right around the corner either.
Gotcha. You've said that a couple of times, and I think you're right. I just this bit of a pause has given me some confidence that that it feels like corn, soybeans, and even wheat are looking for a low in here. And I'm just not exactly sure what's going to cement it in place and give us an opportunity to work higher. I mean, it's got to be some demand come in. Or as you said earlier, Clayton, it could be we get that warmer and drier trend in the western belt going, and we start to take some bushels off the yield out there. I guess that could be a catalyst too, couldn't it?
Well, that'd be the best short-term possibility, I'd have to think. Yeah. But again, granted, the likelihood of that is in the minority. Certainly, I'd have to say. But you look at these forecasts, and it's not just outright bearish right now. So that is a possibility, I think. But
okay.
I don't know. Going down the road, it just seems like the selling will subside. At some point the market will run out of sellers. Like we just talked about a little bit ago, I think the funds are pretty close to running out of their selling ammo. The farmer, he'll be done selling, presumably, when harvest is half or 2/3 done. Everything will pretty much have a home at that point for a while. And you got to think, as bad as prices are, most of these farmers, have had some really remarkably good years. So I think they've got some holding power here. So once that selling subsides, that is enough to put in a bottom, I think.
Okay. All right. You watching what's going on in cattle? Highest close since October.
No, to tell you the truth, we don't do a whole lot in livestock.
Okay. All right. What are you thinking on the economy? Let's go there.
Yeah, I think that you kind of wonder the swoon that we're getting in the stock market here. I just wonder if it's pricing in a much higher chance of us having a Marxist president than a lot of people think. I think that Kamala Harris is an extreme far leftist candidate, and I think that the economy would not be expected to do. Would be expected to have some problems going forward. And even if she isn't the victor, I think if Trump wins, we've got some problems. I mean, there's a lot of softness out there that are kind of bubbling up to the surface, it seems like to us right now. And that being the case, I think that that would be sort of a negative on all things. But on the other hand, when the equity markets are kind of a magnet for capital when they're in an uptrend, and God only knows we've been in the mother of all uptrends for years now.
Yeah.
And that's kind of sucks all or capital out of a lot of other sectors. Well, if equities are going down now, that could be a positive for our markets, I think.
Gotcha. Clayton, I enjoy these conversations a lot, man. Thank you.
Okay. Always a pleasure, Chip. Thank you.
You bet. Clayton Pope Commodities. Davis and I will be right back.
We've cleared the schedule for you. Give us a call at 855-482-5524 and join the conversation. And welcome back to AgriTalk, everybody. Your pal Davis Michelson here with Chip Flory. On your hump day, Wednesday afternoon. Question for you, Chip. Now,
yes.
you know how much I know about sports ball. Not much. So let me ask you.
Yeah.
I read something here just real quick. This from the Real Kansas City Royals fans Facebook page.
Okay.
Royals win! ! Guardians lose. Red Sox lose. Twins lose. The Royals now tied for second place in something called the division and one game up on Boston in the wild card. What a weekend, it says. Wow. Second place in the division, one game up on the Bo Sox in the wild card. Chip.
In the wild card. Yeah. Keep charging ahead, baby. All they're talking about is extending your season.
Okay, talk to me about wild card. Wild card. I know what it means. I don't know what it means in this context.
Okay, the division winners are automatically in the playoffs.
Okay.
But, there's some other teams, and plus there's 3 divisions in the American League and 3 in the National League. Well, you can't have nobody's going to get a bye out of the deal, so you got to have your wild card teams come in.
Ooh.
Okay. They're the ones that have the next. Boy, how do I exactly describe this? who it's the best record of the teams that don't win a division.
Okay.
That make it in. Yeah.
That makes sense.
Okay.
Huh? Yeah.
There you go.
It would be not unreasonable for me to say I would favor a Royals wild card berth. Could I say something like that?
Yes, you can. You
Okay.
can say that. It's
Okay.
only a game. There's a lot of time left. I mean, we've got all of August and September left. Okay?
Okay.
Just be careful.
And when we talk about these
But
clubs
October baseball is fantastic.
it's coming up. It's coming. If I don't know, just for example, like if we compare this record, this standing to like I don't know the Cubs maybe, what would it look like?
Yeah, probably better. What are you trying to do to me, Davis?
I'm picking on my buddy right now, just a little bit.
I don't
Let's
understand.
go Royals.
I don't understand. You know, I'm not even sure. Okay, now they're up 2-1 right now on the top of the sixth over the Brewers.
Okay.
Yesterday's game was just so Cub. A great pitching performance early, and then just could not do anything with it. But I'm not exactly sure if we've even got much that we're playing for at this point.
Is the honeymoon over then?
For who? For the Cubs or for Harris?
For Craig Counsell.
Oh, for Craig Counsell? Well, he's still trying to beat up on the old team.
Highest paid manager in baseball.
Highest paid. When you're a Notre Dame grad, Big Apple.
Yeah.
Sometimes you got to pay up for that.
Yeah, I'm not, by the way. Anybody else? Just in case. I've heard, though, that they can do pretty well.
Is that right?
Chosen fields of.
Yes.
All right. Wait, before we close this off, shout out to the Brewers and Brian Winnikins, WRDN in the great state of Scotty. Chip?
No,
no, he's not
whatever.
doing it. Yeah.
Oh,
it's heating up. It's heating up on AgriTalk. I can feel the tension. Bubba says the Big Five come under pressure, and the NASDAQ tanks. Is that the stock market equivalent of everybody leaning on the same side of the canoe type of a thing?
Yeah.
It's a little different in the stocks.
Yeah, I think, and Clayton also said that if we do get a migration of investors out of equities and these equity runs that are historic, if that does start to happen and we do start to see some of the investors look for alternatives out there because of his words, not mine, but I don't disagree, the potential for the most socialist government ever in the United States, well, then you got to pay attention to it. If we're gonna be marching forward into an administration, and I've had several people ask me in the last 48 hours, is it really possible that Harris could win? Absolutely.
Yeah.
And to those of you out there that don't think it's possible just because she's quote unquote so bad, you're wrong. Mm-hmm. It is all about momentum. It is all about messaging. It is all about campaign management. And if the momentum is there, and she's got the momentum trade right now, there is no question about that. I mean, we are less. What are we? 10 days out from an? No, no. That's all it is. 10, 11 days out from an assassination attempt.
Yeah.
On the GOP candidate, and all of the momentum that was behind former president and candidate Trump. All of a sudden, that has just been like ambushed by the Democrat Party with the decision by President Biden and the momentum behind now candidate Harris. I mean, Davis.
Yeah.
It's almost like they had it planned.
Well, and here's the thing. There's an episode of The Simpsons, and I don't know how many of you good folks have clued into this Simpsons thing, but they do seem to, I don't know. It's weird. There was a thing with The Simpsons and Trump. Oh, my gosh. There's an episode, I'll go quick, in 2000 where Lisa Simpson becomes president, and she's wearing the exact clothes that Kamala Harris wore on Inauguration Day, Joe Biden's Inauguration Day. There are those who believe that The Simpsons tells the future. Look it up. Go to YouTube and yeah.
Well, the escalator kind of solidified that in a lot of ways.
Right?
All right. National Weather Service 6 to 10 day outlook July 30th through August 3rd. Above normal temperatures expected over the entire Corn Belt. Highest odds for above normal temperatures in the Western Belt. Below normal precipitation expected in the western 3/4 of Iowa and the rest of the Western Corn Belt. Near normal to above normal precip expected in the Central and Eastern Corn Belt. Thanks so much for listening. We've got Emily Score, Growth Energy, tomorrow morning.